Hi folks, quick video update. Just let me know, I'm leaning towards shorter and more frequent videos, but if you'd prefer longer and less frequent videos, let me know in the comments below. Let's go through the currencies to start with. So generally, dollar index. Let's just start with the dollar index as always to give us a general idea or guide of where we might go. We've broken down through support, as you can see, and the 100-period moving average, and we've been stuck there for about 4 days. So are we going to bounce up from here? We have some support just below us at a Fibonacci level. A lot of people think the dollar's due for a rally. I know it's a cycle low on the dollar index, but that doesn't mean that we're going to rally immediately. We could retest these levels slightly lower down at about 105.40, or the 200-period moving average at about 105. So it's all up for grabs and kind of up in the air right now. But we do have some positions on. I'm long on the euro. Pretty much like the dollar index and most of the other currencies, we're in the doldrums. Look how long we've been in this range on the euro, going back to essentially November last year. We have not really moved since then. Kind of looks bullish, maybe a double bottom, kind of constructive, trying to sort of create some upward go movement here. We are above the 20 and the 50-period moving averages, but stuck under the 100 and the 200 significantly above us. If we break up through this swing high at about 105.30, we could see a move up to about 106.20, and that would probably be the place to take profit, maybe up to the 200-period moving average and this previous swing low. So that's the euro. Pound pretty much the same. We're hedged on the pound, no real direction there. And the dollar yen, although I continue to think this will move down, as you can see, we've had this dramatic move down all the way from the top, move down into these support levels. We do have a potential double bottom right where we are, of course, and you can see that the price has reacted to that with almost a weekly tweezer bottom there, but certainly a double daily bottom. So now that we've regained this 50% retracement level, the bottom of this pink block, kind of looks bullish to me. I'm open to both directions. We do have that little double bottom and an attempt to rise up. We are still stuck below the 20, 50, 100, and the 200. Most of these currency directions are pretty difficult to predict right now. We're stuck in the doldrums, and until there's a catalyst, I think we'll stay here. We do have another position short the Swiss franc Japanese yen, the Swissy yen, and you can see we're just trying to form resistance there. This is a big bottom on this currency pair, and if we break down through here, it looks like it's trying to. Sort of something like a head and shoulders, or at least an M-shaped potential pattern here. And I think we should easily see a move down to 162.20, and then probably significantly lower than that down to into maybe 150 or so. But we've got to get through that bottom right there, and we're busy trying without much luck so far, but we've had repeated attempts, and we are on the daily making lower highs and a flat bottom low. Now on stocks, we've been short on the NASDAQ and we've been long on Tesla, and we're now long on Coinbase. This is the way NASDAQ looks. We took profit on these short positions down here at the trend line and the 100-period moving average, and we've now actually reversed to fractionally long, just a small long position on there, seeing if we can hold this 100, bounce back up in here, and then start to retest these higher levels. We could get all the way up to 22,800, and given a bit of a shove, we could even get up to 23.5. I pointed this out in the last technical video that I did. So now, after having been short, we're slightly long on the NASDAQ, nothing the S&P or the German 30. That looks kind of bullish. German 30, get a lot of questions about this, what's going to happen next. We did hold that 20-period moving average and the top Bollinger Band, and we're now moving up again. A lot of people think this is due to move down, but if the euro weakens or strengthens, that will affect this as well. We don't know which way the currencies are going to go. We do know that the bond yields are in favor of a weaker dollar, and that could actually push all the stock markets up. We're also long on Tesla, the most hated stock of all time right now, but we are long. We're a bit out of the money on this. We've got a tranche there, small one, a slightly bigger one there, and a slightly bigger one here. And we're now looking to see what happens at this trend line, this order block, the 200-period moving average down below us. We've sold off all the way from 490 down to just below 300. So a massive move down really on Tesla. And let's see if we can find some support and garner some more favor for this much misaligned or maligned, should I say, car or tech company, depending on how you see it. I continue to think that I know that the car sales have been poor in Europe, but perhaps that's not the biggest consideration here with Tesla. There are all sorts of other things in the pipeline, including the political involvement by Elon Musk, which has caused a bit of a spook in the stock markets. Well, the Tesla market. We have nothing on Nvidia, MSTR, MicroStrategies. I'll be looking to buy this at some point, but we've broken down through significant support, and there's the 200 though. If we touch that 200 today, I might just give it a go on buying MSTR, and perhaps you can see in the pre-market we're slightly higher because Bitcoin's picked up a little bit, as we'll see shortly. But if we do get a dip down to about 230, I'll certainly consider buying some MSTR. We also went long on Coinbase yesterday into this blob. I see we're a little bit up in pre-market too. So we're starting our long positions down here at the bottom of that channel line, just below the 200 period moving average, and back into the almost to the center of this longer term channel. And we do have a big order block down here between 178 and 160, so we may have to reach down there. I think a lot depends on what Bitcoin does over the next week or two, and Coinbase will respond accordingly. We have nothing on Apple. So having said that, let's go and have a look at Bitcoin, just touching 89,000 after a massive sell-off over 2 days, and obviously breaking down through those previous lows. We added another tranche on there. This should be there, but not before it carried on moving down quite significantly, being a little bit spooky there. But we've held our positions, and we had a big spike up yesterday, and let's see how we go. It's not great, I have to say. We've broken down through this long-term trend line. We've broken down through this red line at 91 and a bit, and we've broken down through this other rising sort of channel line, the shorter-term channel line. What we really want to do is get back in there as soon as possible, today ideally, or at least during this week, and then see this move up back into the top of the channel and start breaking through some of these levels. I have to say, Bitcoin is not looking at its finest right now, and despite yesterday's bounce, we could have done with a bit more of a recovery yesterday back to the trend line. We didn't even get that far. So we'll have to watch this very closely and not be blinkered in thinking that there's only one way for Bitcoin, and that's up. We have to be careful of that. What I do like, though, is these bounces on Ethereum and XRP, which we saw yesterday. They did in fact reclaim their levels, whereas Bitcoin didn't. So the fact that the altcoins did a little bit better, I suppose, is encouraging in a way for Bitcoin, but it also means that maybe altcoins have got their season coming up. So going on to metals, we have no positions on any metals whatsoever. I see there was quite a big bounce on copper yesterday, but let's look at gold. I've drawn these two paths in just for guidance, and I basically said what we'll do is follow one of these paths. I'm not ruling out a continued rally above 3,000, maybe 3,200, maybe 3,400. Not ruling that out at all. Equally, I'm not ruling out a dip down to at least one of these trend lines. We could drop down to as low as 2,800, 2,700, and that's these longer term trend lines. And notice that we've got a couple of moving averages, the 50 and the 100 and the 200 down here. So if we do break down there, I'll be waiting for a breakdown, a retracement back to the underside of this confluence of this moving average, the 20 period, and these two rising trend lines or channel lines, triangle lines. So a breakdown, a bounce up to sell from move down to 2,800, and then maybe 2,720, this next line here. At the extreme, gold could retrace all the way back down to the 200 period moving average and this purple line, and even into this big order block closer to 2,350, the original breakout level before this recent rally. So it's just a matter of wait and see right now. Which path are we going to follow? The green one, a bounce off here would confirm that, or the red one, a breakdown through and a retest from underneath, and then a continuation would confirm that. We'll follow the money on that one, I think. And then when it comes to silver, the same sort of idea. Silver has dropped back down into its trend line, a short-term trend line, and this 100 period moving average. And we'll be watching this very closely as well. Maybe gold will lead silver in the next direction. What happens here, the reaction to this level. Or silver might lead gold, and depending on what silver does, gold might follow suit. Naturally, gold is probably the most likely one to be the leader. So we're watching both of those very closely for what happens over the next couple of days. Copper, I said earlier, that has jumped quite a lot, and big bounce yesterday off that red line, which I had drawn in from ages and ages and ages ago. It's a good support level. That's a good reversal. But we've only reversed to the Fibonacci level. If I draw a fib from the top to the bottom, you can see we've retraced exactly 61.8% and then started moving lower. So it could be that this is just a retracement back up to the Fibonacci level and this previous swing high. It's definitely a key level. 3 equal tops there, the break up higher, and then the big reversal candle. This pattern is dominated by this big bearish reversal engulfing candle and dark cloud cover at the same time. So until that actually gets broken, I'm not too bullish on copper. We could see a move much, much lower. I'm looking at a potential retest of this downward sloping trend line that could take us even lower than these previous lows, or perhaps just to move down into about $4.24, something like that. So we'll be watching copper. Remember, it is Dr. Copper, and it's likely to lead the markets in the way it reacts to demand for copper used in all sorts of applications, including industrial, electronic, electrical, and chips and that sort of thing. Now, let's go across to uranium and nat gas and WTI. You'll know my position on nat gas. I did a video on this yesterday. Nothing's changed. Let's have a look at the continuous contract that I'm in. Remember that the rollover is today on the Henry Hub futures at the NYMEX, so we roll over into the April contract. So for now, we're long. We got long at $4.06. We're currently trading at $4.19. We're holding the 20 period moving average. There's the 50. My stop loss is now at break even. We got short there originally. We got out at the bottom. We switched direction to long over here, and we're still long on this current trade. Looking at the NYMEX chart, the Henry Hub futures, you can see the same sort of thing. This is the day chart. Remember, we had this line which we thought we'd follow. We actually did. We bought at the bottom, we sold at the top, and now instead of letting this carry on, we've actually changed directions, having bounced off that level there. So if we look at this on the 4-hour chart, you'll see something pretty similar to what we see on the continuous at Pepperstone. And there we're holding the 20 on the Henry Hub futures price at the NYMEX. We're also short on WTI oil, and that's going pretty well. I did cover this in the last tech video as well. We're looking for a breakdown to this level, moving down there so far. We're in at about $74 and a bit. We're currently trading below $70 at 68.83. Looking for a move down to about 65 and then a break and close beneath this big order block, which I've named Moab, mother of all breaks. There it is right there. And on a breakdown and close and hold and a back test, we should see a continuation of this move down into the 50s and then perhaps even the 40s. So that's WTI, noticing that we've broken down through that red line. And similarly, Brent Crude has also broken down through the recent short-term support. We're also long on URA, waiting for this to open up. And as I said in my previous video, we're willing to buy any dips, perhaps even starting today, a little bit of a bounce in the pre-market, and particularly down into this level at around about 23, 24, 22. I'll be looking to add more uranium. I don't have a full position on this, so I've got plenty of space to add. Then going across to VIX, the 10-year yield and TLT. We took some profit off yesterday on TLT, as I said I would, having broken up and moving up towards the 200-day moving average. The target's up here at around about 94.60, this previous swing high, and perhaps even the 200-day moving average at 92.70, and we're currently trading at 91.15. So a nice move up, enabling us to take some profit off there, and that was actually forced up by the fact that the 10-year yield has moved down, breaking down through the support, breaking down through the 100-period moving average, and reaching down towards the 200. When we get to the 200, I expect we may see a bit of a bounce and an attempt to move up. This bond and treasuries market shows us which way the market's thinking in terms of interest rates, and although there is an idea that we may not get any cuts this year, the bond market seems to be indicating something different. Going across to softs and grains, well, those who are trading cocoa and coffee will be very pleased. I'm not going to zoom into these just to save time, but moving down, actually I will zoom in. So coffee targets are down here, something like that. It's not going to go straight down there. We'll get some bouncing around. But that's the target down there at about 320 to 330. We may have to pause at this previous swing high at roughly 350. So that's coffee looking pretty good. And also cocoa, we're doing pretty well on that one too. And for those of you who are short, you'll know that this is pretty good news. We now have two short tranches, one from there, both in profit. Looking for a move down on cocoa, roughly following this red path, somewhere down into the 7,000 level, but I think we could get a lot lower than that in time, down to this next trend line. These are very long-term trend lines. And then down into a reasonable sort of price for cocoa, which would be about 3,500 to 4,000. I also added an extra long tranche onto cotton, now that we've broken up through that, falling wedge, broken up, retested from the top side, and trying to bounce there, and I think we've got a good chance of this moving up. Targets for cotton, as you can see, are drawn in there by my red and black and green lines. We've also just taken a long tranche on orange juice, having been short most of this time. We've now reversed to long, looking to buy into this sort of order block, previous swing low, previous swing high, pretty key level, and we're long from right here. This market has not yet opened up today. We'll see how we go, looking for a big bounce. Very, very, very oversold. But as one of my members pointed out, don't try and catch a falling knife. This may carry on moving down with more rapidity than we might think. Also on wheat, I took another long position on wheat. We took some profit at the top there at exactly 600. We've now added that position back on at about 570, using some of the profit from that longer trade where we took profit to cover some of the risk of the new position. We're also long on soybeans. We're also long on sugar. We did take some profit on sugar at both of these levels. So we've taken about 50% of our profit. We took some there, we took some there, and we'll also take some there. And once we've taken the next tranche of profit, we'll just let this run as far as it can go. We could get up all the way to 24 cents and even closer to 26 cents given enough time, but we'll certainly take another tranche off at around about 21.60 or 21.50. Well, that's it, folks. I think we've covered everything. Just to remind you once again, we've got a natural gas course launching next month in March, and I'll be sending out lots of information about that in due course. If you want to make sure you get on the early bird list for discounts and early release, make sure you subscribe to this channel. You will receive preference. Also, make sure you've visited some of the links below where you can enter the early bird list there too. I'm also sending out a survey today to ask you what you think you would like to see in a natural gas trading course. So keep your eye on your inbox and watch any updates on social media. Well, take care, and I'll see you in the next video.
Like a knife through the heart. Henry Hub's a battleground. Bulls against the bears. Whispers of a cold front send us in the scares. Margins tight, margin calls. Nerves they fray. Wondering if I'll see green by the end of the day. I'm a natural gas gambler, riding that fiery storm. Excitement and fear, that's just how I was born. Greed's got me in its claws, profit's just a taste.